Good morning, afternoon or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, for what is going to be another jam-packed daily cryptocurrency market update. And there is a lot that's gone on over the past 24 hours. We had Jerome Powell in front of Congress, and I like how Congress always approached Jerome Powell because they always seem to be rather critical of him. They were certainly bringing up the questions in regards to interest rates, where they're currently at, and what that means for the everyday individual within America. So I definitely like certain Congress members more than others. I think some probably get paid less by special interests than others or have different special interests, but they all have special interests nonetheless. However, there were some interesting things that came out of that we're going to be looking at. Of course, we have CPI, which we'll also be looking at. We'll be looking at JP Morgan's warning and expectations for this on Thursday. And then we have, of course, forward rate guidance. We can look at the Fed Watch tool. We'll talk about what the repercussions for the Fed lowering interest rates, in my opinions, are going to be, in the sense that we're going to see that weaken the Dixie, which is going to see risk do well. And this aligns with global liquidity cycles and everything else. And of course, technically, what we looked at in regards to the cryptocurrency space. We've done a lot of technical work on the actual crypto space, but it also, the beautiful thing is it aligns with sort of macroeconomically everything that we're looking at and where we're currently at. And we can back that all up technically, of course, which we're going to be doing in this video. We're also going to be talking about what has currently taking place with FTX. Now, it's very interesting, isn't it, that the FTX sort of creditors, users, will actually be getting paid back more than what they had on the platform. I think they're getting back something like 120%. I think it's about I'll bring up the exact figure. It might be about $16 billion is supposed to be flowing back to these people in the form of cash. They've already done the bulk of the selling. Of course, we know they did that through Gemini. They did that through multiple different platforms. FTX has been sort of recuperating cash. They have now done that, and they are going to be paying people back, I think, in November. And I think November, October are usually quite good times for the market. So we've got the best months ahead of us. We are in a bull market. We're just waiting for things to play out, ladies and gentlemen. So without further ado, let's dive into it all. And let's kick things off with some comments from Fed Chair Powell. So, Fed Chair Powell says holding rates high for too long could jeopardize economic growth. We're already seeing that. We're already seeing a slowing down. I think last year, the Fed's still kind of riding on the back end of last year and just how good the economic data was. We've had significantly worse data within the US and the UK, but we've also had good data in regards to inflation. And some comments from Jerome Powell on Tuesday expressed concerns that holding interest rates too high for too long could jeopardize economic growth. Reducing policy restraints too late or too little could unduly weaken economic activity and employment. We're already seeing that uptick in employment across the board. It's not just within the US. We're also seeing it in the UK. We're also seeing it in Canada. There was some interesting stats out for Canada this morning. The correlation between unemployment and the markets is when unemployment's at high, markets are at low, and vice versa. So unemployment is a real thing to watch. It could be that spanner in the works, but if they can bring rates down, I do believe that's going to pump liquidity back into the markets. And of course, you're going to see the likes of crypto perform the best in what is going to be a liquid environment for assets generally. So risk is going to do well. Crypto is going to be the best performer of that. So Federal Reserve Chair Powell on Tuesday expressed concerns that holding interest rates too high for too long could jeopardize economic growth, setting the stage for a two-day appearance at Capitol Hill this week. The central bank leader said the economy remains strong, as does the labour market, despite some recent cooling. Powell cited some easing in inflation, which he said policymakers stay resolute in bringing down to their 2% goal. At the same time, in light of the progress made both in lowering inflation and in cooling the labour market over the past 2 years, elevated inflation is not the only risk we face. So the real economic stat to watch, I think, at the moment, certainly if you're in the bear camp, is unemployment. I don't want unemployment as a bull to be upticking because we know the correlation with risk. If you look at the correlation between the SPY, for example, it's a bad one. It's like a seesaw. Unemployment goes up, market goes down. So we want to be in that sweet spot, which we've said we are going to go into due to the kind of banana republic-esque nature of the central banking systems. And they're going to continue to print bananas, basically, if that makes sense. So He goes on to say, reducing policy restraints too late or too little could unduly weaken the economic activity and employment. So, according to the CME, which is the Fed Watch tool, we aren't on the 31st of July going to get a rate cut, which I think was very much priced in. And however, September, it seems likely that we're going to get the first one. And the Fed have deliberately, we see Europe, we see Switzerland, we see, I believe the Bank of England probably more likely going to go before the Fed in terms of cutting rates. We see all sort of major central banks starting to cut rates, except for Jerome Powell and the Fed. Well, why is this? Well, because they know the repercussions it's going to have on the dollar. And not only, the beautiful thing about where we are in the crypto space right now is not only do we have that macro view, which we're expressing here, and we can back it all up technically. People say, oh, well, you see it on Twitter all the time, and it winds me the hell up. They say, oh, well, pivots are bad for markets. Under certain circumstances, they are. So if they're pivoting because, oh, shit, things are breaking, then, of course, that's bad for the markets, right? I don't think we're going to get that. I think we're going to get smooth seas, guys. And the reason being is because they're just going to print more money and continue to inflate things. And people are going to be going around their daily lives like they, I saw something crazy today that actually they're planning on incorporating a 90% tax for people that earn over a certain amount in France between that new coalition that came up. I mean, all you're going to do is incentivize people to move out of France. Anyway, I'm not sure really quite where I was going with that. But ultimately, we are going to... The beautiful thing is we've got this macro kind of context, we believe very right. And technically, when we look at crypto on its own merit, when we look at things like BTC, DOM, when we look at Sol, BTC, when we look at, the crypto index funds, so on and so forth, Total 2, it all looks perfect and aligns. Even the altcoin market, very much sort of coming out of its accumulation, it all looks perfect. And we're just waiting for the kind of hammer or the penny to drop. But the interesting thing with pivots, which was the point I was making that I got sidetracked from, was if you look at the past 5 times the Fed has pivoted, only 2 times have been bearish for the markets. The other times, the markets have actually gone higher. So you've got a higher probability, if you look at the past 5 times, of markets doing well than bad. So pivots don't always mean destruction. It's like one of these things that gets thrown around, but it's not really true. The problem with people is it's not what they know, it's what they know that isn't so. So when they lower interest rates, which they will do, this is going to drive the Dixie down, which in turn is going to drive risk up. Okay, it's also, when they start to lower rates, going to unlock what is $6.6 trillion out of money market funds that are currently enjoying a risk-free 6-7%. They're going to go hunting for yield. That's going to come back into the stock market. You're going to have looser monetary conditions, better liquidity conditions. Ultimately, this is why technically when we look at things, it looks as good as it does. And we can even go a step further and use Stan Druckenmiller as a barometer for being bullish, because he went from Nvidia, a big cap, down to a small cap. So you could use Bitcoin, Nvidia, IWM, altcoin basket, basically, and when we look at that. So this is rates, obviously, with a Dixie. When rates come down, typically the Dixie does. What's the fundamental reasoning behind this? Well, of course, the dollar is a basket, or the Dixie is the dollar against a basket of other currencies, most notably the euro. Now, the dollar gained strength against these other currencies, even though these other currencies were also upping interest rates, thus increasing the demand for them to pay off the debt. The thing is with the dollar is it has more debt, a bigger market than these others. So when its interest rate goes up, it has more of an effect, and vice versa. So we already have this kind of channel. We know that when they do lower interest rates, which we believe is very much coming, that is going to, and this is the correlation, see risk do very well. And we're waiting for this kind of make or break moment here. I do think they're going to lower interest rates. We're not in the higher yields camps or higher interest rate camps. We're in the lower. We're in the inflation has been slayeth camp. And actually, if you look at a number of things, obviously what true inflation are talking about here, you can see this is called PCEs. We'll look at this in just a second, guys. This is true inflations. I don't think true inflation... Thing is with true inflation, right? They use a different basket to what the CPI uses. So it's not really the CPI, is it? But you could argue it's maybe more accurate because it tracks a broader basket of things. And I think the Fed even took coffee out of the CPI. Obviously, nobody drinks coffee, I'm sure. So we have inflationary data coming up. So we're on the track that the Fed are going to lower rates. Okay, there's that pressure building up on them. There's a lot of pressure put from Congress members to the Fed in regards to actually lowering rates because of the effect it's having on people, mortgages, so on and so forth. So we think they're going to lower from that kind of point of view. Also, technically, when we look at yields, we have that broader thesis on the dollar, we have that broader thesis on risk, all aligns. And also, the main reason they've been upping interest rates is inflation. And we've got CPIs coming out expected at 3.1. The prior one was 3.3. And the month-on-month, JP Morgan are actually weighing in on here. And basically saying, this is month-on-month, by the way, guys, so it doesn't look like it makes sense. But we had no inflation month-on-month last month. If it comes out below 1, they're expecting, and they're only putting a 2.5% probability on this, a nearly 2% gain for the S&P. Anything below 1 to 1.5, they've got a 15% probability of. They expect it to come out around about 2% basically, month on month, which is kind of in line with Forex factories. So it's going to be interesting what's going to take place tomorrow. Unemployment claims are going to be one to watch. Also, you want a low number for that. It's also a very busy week in terms of earnings. There's a lot going on, but our outlook remains very bullish. We think inflation is a beast that has been slayeth. We are still exceptionally bullish on the Bitcoin chart and still have that 151k target. Until we get invalidated on why we're looking at that, we stick to the plan. And I think this is just going to turn out to be a bull flag, basically, or some sort of a broadening channel that you're going to break to the upside out of. Bit of strength coming in here. It's very interesting that we continue to see the gobbling up of Bitcoin. Bitcoin dip buyers pour $438 million into US ETFs in 2 days. That's the prior 2 days, ladies and gents. At the same time, the government's selling is largely getting absorbed at this point. That's the prior 2 days. Last week, we saw inflows to a similar degree, even less than that in the whole week of last week. So things are heating up. Also, the price action looks very similar. Obviously, total two, we are still expecting this inverse head and shoulders to play out, taking us to $3.8 trillion. I think one of the best charts is Sol BTC in regards to the coming alt season. And then, of course, to close things off on a little bit of news, we have $16 billion to be repaid in cash, not crypto. So it's not going to be a dump event. It's likely going to be a buy event to be paid to creditors in regards to what took place relating to FTX. So I think when you weigh all that up, guys, it's a rather bullish outlook we've got ahead of us. We think our macro kind of summary or direction on the markets is a correct one. Coupled with everything else, certainly technically what we're looking at, it's just a case of hanging in there, guys, and allowing things to take place. And actually, if you look at how spot on we've been in regards to the markets, the altcoin market hasn't really played ball in regards to done as much as we thought it would. It will still come, but when you look at where we've looked at the stock market going, where we've looked at the dollar going, where we've looked at things going broadly, we've had so many targets made for so many things. Crypto's turn is coming soon, ladies and gentlemen. So that's it from me. I'm going to love and leave you all on that note. If you've enjoyed the content, a like is always greatly appreciated. So is a comment. And look forward to seeing you all in the next one. Thanks all for watching, guys. I'll see you all in the next one.